Tensions between NATO and Russia seem to be at an all-time high, and the market's finally paying attention to them. But there's some really interesting production stats that have come out in the last couple of weeks too that I can't wait to share with you. Hey, I'm Aaron of the Oil Balance, and I'm here to elevate your understanding of the oil market. So let's jump into this together. Hey everybody, let's go ahead and start off with the chart pack for this week. I want to go ahead and remind you we're still running our sale on the Elevate Your Understanding report. It's got 20 pages of really good information, whether you're trading futures or you're trading on energy companies. This thing has information that you need to know. There's a lot of information in there that I can't get to on the video this week, and we'll sort of recap that at the very end. Stuff that you would only get in the Elevate report that I don't have time to put in this video, but I think it's really important information just the same. So please go to our website, theoilbalance.com, and subscribe to the Elevate report while these sale prices last. Around the first of the month, I'm going to have to put prices back up. So please check that out. At any rate, as you probably saw this week, we're up almost every day this week. Friday we opened and closed at about the same price, so a little bit of a doji looking formation on the daily WTI contract there. But what's super important though is we did settle above this 20-week moving average. Again, that's the middle of the Bollinger Band. Normally I would expect that to cause the market to sort of pivot around that number and for that to become support. And we try these different resistance lines to the upside now. So we've had 6 weeks where we've been sort of below this 20-week moving average and just above this support line here. Maybe we're going to flip that now into a new regime where we try to test this resistance level. And if we break that, there's maybe some more resistance up around here. And then really you're looking at the top of the Bollinger Band as the ultimate target. But there's a lot of information that's come out this week that I can't wait to share with you. And yes, this is bullish. There's a lot of tensions, as I mentioned, going on between Russia and NATO. Again, it's not my speciality to say what's exactly going on, but you've probably seen in the news that all the drone incursions, or at least people claiming there are drone incursions over their countries. We've had Russian fighters and bombers flying into international airspace very close to Alaska. Again, that happens. But why are they sending bombers and fighters now? That seems to be maybe a little bit of an elevation, or an escalation, I should say. So you can see why the market's maybe getting a little bit excited about things going on in, making sure they're pricing in enough risk premium, which, by the way, I don't think there is, but that's maybe a separate subject. But for right now, it seems like we've got a good enough result this week on the weekly chart, on the settle, that maybe now we can start trying to price in a slightly higher range. So we'll see how that goes. Again, if you get the Elevate report, you'll see how much, it looks like there's some producer hedging activity going on this past week, and we kind of go through that too. I'm not going to have time to get through in this video, but it does seem like we're getting up to high enough prices again that they're maybe, putting on some hedges now through Cal 26 anyway. But what I wanted to share with you, I'm assuming you've all seen the news about Russia and Ukraine and NATO. So we're kind of, going to skip over that because, again, I'm not sure what exactly is real and what's false and, all that sort of thing. Obviously, the tensions are growing. I think that's what everyone can agree on. But what I think is super interesting is if you look at the production numbers coming out of OPEC Plus, and all this. So again, as I've said several times, Petrologistics is my go-to source. They send out weekly reports, or they report at least on weekly on most of the OPEC countries on what their production level is and what their exports are and sort of where they're going. No, they're not a sponsor of this video. Maybe we can get to that point later on, but it is a company that I trust and I've used for a lot of years, in my time in the industry. And so, I highly recommend that you check out Petrologistics if you're in the energy industry. But all that is to say, we had a huge increase in production. OPEC themselves, if you just look at the core OPEC, the 12 countries that make up OPEC, their production is now just over 30 million barrels per day. Again, according These are sort of preliminary numbers coming out of Petrologistics. Obviously, we're not all the way to the end of September yet, but they're on course to hit more than 30 million barrels per day of production among the original, or sort of the core OPEC, those 12 countries of the core OPEC. We haven't seen that sort of level since December of 2018. So that's a fairly big number. And again, all these references I'm doing about, when was the last time we saw this, I'm keeping it all to within the Petrologistics sphere. So all the numbers would align with themselves. I'll let you know when I start talking about other information sources, because then you start, as you can imagine, mixing a little bit apples and oranges in there. Saudi itself, the production was up 500,000 barrels per day, up to 9.6 million barrels per day, according to Petrologistics. If you add in the OPEC 12 plus all of the DOC, so all those other countries that agreed that they would sort of manage global production along with OPEC, now we're up to 45 million barrels, 45.3 million barrels to be precise. We haven't seen that sort of number, 45 million barrels plus, since December of 2019. So again, we're going back quite a ways here. If you just look at the 8, which is what I have on the screen here, so this orange line, we're looking at production at 34.2, so that'd be up about 800,000 barrels per day, month on month. Again, these are preliminary numbers, so they're probably going to change a little bit. So if we were talking just about OPEC data, so now I'm shifting, talking about a different data source. If we were talking about just the OPEC numbers, they should be at 32.8 million barrels per day, not 34.2, which is what Petrologistics is saying. So there is a bit of a remaining disconnect, but it seems to maybe be getting a little bit tighter, at least kind of going in the same direction anyway here lately. So we'll see what happens. So these numbers sound fantastic, but we're basically back to where we were in June. So if you recall, in June, we spiked up according to Petrologistics and then came right back down over the next 2 months. And, to go back even further, OPEC, the 8, the group of 8, is supposed to be increasing production since, versus the March number. So in April, they were supposed to start, really bringing back production to the market. Within the Petrologistics number set, within this orange data set here, if you look at March versus where we are now, it's only an increase of about 600,000 barrels per day. Obviously, it's been quite choppy during that time. OPEC would have you believe, it's closer to 2.1 million barrels per day using the OPEC numbers coming from their internal sources and their secondary sources. So, again, it's quite a big mismatch between the two. Back in, going back to 2019 all the way up through 2023, the two groups, Petrologistic and OPEC, were really close in terms of the production numbers they were projecting. But there's just been this huge divergence ever since OPEC, the OPEC 8 agreed to take barrels off the market and slowly bring them back on. So there's just been, Petrologistics would lead you to believe that they hadn't taken those barrels off the market. And now they're slowly bleeding some stuff back into the market as time goes on. But it's not just production that is going up. Exports are actually going up faster than what production is. So part of that has to do with it being September. Things are starting to cool off a little bit. It's not quite as hot as it was in July and August. I mean, it's still, fairly hot, at least here in Texas. But the demand for, internal Saudi Arabia is not as high. We've also got some refinery turnaround activity going on in the Middle East that's relatively high right now. So there are extra barrels that aren't being consumed in country that would allow them to export those barrels to the market. So again, a couple interesting things going on here. If we look just at the Saudi numbers, again, going to Petrologistics as our source for this, Saudi exports are up almost 1 million barrels per day, month on month. When you divide that through and look at the percentage increase, we're talking about 17% increase or so. Again, these are just preliminary numbers, so let's not get too set on that, because they will probably change over the next couple of weeks or so. But the bigger point is, remember I told you a couple of weeks ago, China was dropping its prices into Asia, the OSPs, the official selling price numbers into Asia. They were talking about raising exports into China specifically between 15 and 20%. and now all of a sudden their September exports are up 17%. So right in the middle, right, right dead smack in the middle of that range that they had set. Again, keep in mind the transit time between when these things leave and if you were leaving the Middle East and going to Asia, it takes about 25 days or so. If you're trying to go from the Gulf Coast to China, you're looking closer to 50 days, depending on how fast the vessel is going and what exact route you're trying to get to. So there are sort of delays in the system just trying to get from point A to point B as we're going on ships. But at any rate, just within the eight, and we also saw Russia, which is also part of the eight, they increased exports by about 500,000 barrels per day. So again, you've probably seen in the news that they've had these drone attacks hitting Russian refineries. So, and there's probably turnarounds going on as well. It's pretty tough to get that sort of information out of Russia at the moment, as you might well imagine. But the point is that they probably have barrels that they are not using internally for one reason or another because their refinery kit is damaged or they're in turnaround. So they're just going to go ahead and push that out to the market. So one thing I wanted to stress about this is if you think about where these 8 producing countries are exporting to, it's primarily Asia. We're talking 75% of their exports are going to Asia. So this increase doesn't really help Europe or the US that much, at least as far as what we've talked about here so far. This is really trying to squeeze barrels into Asia. And of course, the biggest market in Asia is China. And they have a lot of spare capacity. I've also been reading in different articles that's come out over the past few weeks, if you may know, that the central government of China issues how much they issue quotas on how much barrels they can import. They have quotas on how many barrels they can export. The point is, I'm reading that there's still plenty of room left in the crude import quotas for the end of the year. So it sort of makes sense too from not only getting a push from sort of the Saudi direction, trying to get more barrels into the Asian market or the Chinese market in particular, but from the Chinese side, there's also room for them to accept those barrels in terms of their oil quotas. And apparently there's plenty of room in terms of storage to keep taking barrels. If you kind of step back and think about the whole situation too, in regards to the NATO Russia tensions going on over on the European side, I think it probably makes a lot of sense on China's point of view to be trying to stockpile barrels, in these uncertain times, especially when prices are relatively cheap, right? If something does kick off, God help us if it does, but if something were to kick off in Europe, I would imagine oil prices would spike, and China would be, in a better position than most, sitting on a huge pile of strategic reserves of oil, or high inventories of oil domestically. That would really help them quite a bit. So that all seems to make sense. It all sort of seems to fit together. My big question is what's going to happen in the month of October. What are they going to do? So I think I might have mentioned already that North Asia has about 1.6 million barrels per day of crude unit CDU capacity offline just for planned maintenance. Well, I guess there's some unplanned too, but mostly for planned maintenance going on. A lot of that's in China, but South Korea has some stuff going on. Japan has some stuff going on as well. So, it's that time of year where you take planned maintenance, and that I think everyone knows that in the industry. That shouldn't be a surprise. So I'm very interested to see what they're going to do in October. Looks like a lot of November also is going to be taken up with turnarounds. So it's kind of a prolonged turnaround program this year coming up, for the October-November timeframe. And then by the time we get into December, we should be pretty much back to 100% availability. Not exactly 100%, but really strong refining capabilities, at least in Asia towards the end of the year. So I'm really interested to see what's going to happen as demand for crude oil softens or remains soft for the next 60 days or so in the general Asian market, and OPEC or the 8 are still trying to squeeze these barrels in there. It should be super interesting. One thing though, I wanted to mention too. Here's the Saudi exports shot up just shy of 1 million barrels per day. Russian exports are up about 500,000 barrels per day. So we're looking at 1.4 million barrels per day so far this month. Month on month increase for crude oil exports. The other thing we're also seeing is the talk of resuming flows out of the north of Iraq. So that would be the Jehan pipeline is starting to get those going here. So I thought I'd put some numbers to that, or at least show you a chart. So those northern flows, it's mostly Kirkuk sour that's making its way on that pipeline. Back during 2022, which was the last sort of full year of exports, we averaged, I think it was 427,000 barrels per day on that northern pipeline, which again cuts to Turkey. The reports I've seen so far is that the pipeline has started up. Iraq is able to put, or the Kurds, maybe I should say, are able to put oil in that pipeline. They're only talking about low volumes for right now, about 50,000 barrels per day. There are some political things going on still. It's possible they could get back up to that 400,000 barrel per day level. But the big point I want to make about that is that drops barrels off into the Med. So historically, those barrels have been consumed within the Med, right? So there's a lot of refineries set up to take heavier sour crude, especially in Greece, in Rome, in different Mediterranean islands, Sicily. So they're already set up to take that crude, and that's a nice fit. So that would be maybe one example of an OPEC country being able to increase their production numbers or their export numbers, but it's actually really affecting Europe more than it is Asia, right? It's only 400,000 barrels per day. But the interesting thing is there's a chance that Iraq could get back up to the 4 million barrel per day level. So they're doing about 3.6 right now. If they were able to add the 400,000 from the Jehan pipeline, then you're at 4 million barrels per day again in terms of Iraqi exports. So that would be pretty interesting. But and then here you can see how big this uptick is in the Saudi exports. So they're really getting after it there. When you combine all this together, so in this chart over here, I have OPEC, the 12 OPEC plus all the DOC countries, which is greater than the 8. And then I added the US in there. We're actually at a really high production level. So we're looking at about 58.8 million barrels per day, which works out to just under about 60%, on 104,000 barrel per day global market. You're looking at high 60% number here represented in this chart. So just between OPEC, the DOC, and the US. And we're at very high production rates. We haven't seen rates this high since December of 19, so all the way back here. And you can see how we are flirting with 2019 numbers. And just as a quick aside, 2019 being the pre-COVID year, I think you can argue 2018 was maybe a better demand year, but 2019 was no slouch either. And so we use that a lot, pre-COVID and post-COVID. So if we can get back, sort of globally to these pre-COVID numbers, that's a lot of crude headed out. You need a lot of demand on the other side because we've got production increases from other parts of the world in the 6 years right since 2019. Think of the Guyana, the northern part of South America, the North Sea. It's been a little bit of a mix, but they have been developing more fields here in the last year or two. So I think production's on the upswing there, if I remember correctly. So it's not just U.S. shale. You're also seeing growth over these past 6 years in other places. Argentina, definitely increasing production, the Vaca Muerta formation there. So if we can get back to 2019 demand numbers globally, I think that sets us up actually for a pretty bullish situation on the crude side of things. And then here, if we look at exports, so I've taken the 8, as we saw a minute ago, and added the U.S. numbers to it. We're almost back to these 2024 levels. So pretty strong levels there as well. or sorry, 2022 levels here. So again, pretty strong levels in terms of exports between the 8 and the U.S. So again, we're not seeing. You maybe stress the point that from an OECD perspective, which is basically the U.S. or North America, Europe, Korea, and Japan taken together. That's what OPEC looks at for direction in terms of inventory. That's what the International Energy Agency looks to in terms of inventory, and to an extent, so does the DOE with their steel reports. So all these increases in exports, at least from the 8, are headed to places that aren't part of the OECD. So these increases in exports, if you're just looking at the world through the lens of the OECD inventories, these exports aren't going to help you, right? The market's still going to look really tight or still be actually tight, depending on how you want to look at that. So that's why this is getting so interesting. And as I've been saying, it looks like inventory is swelling in China, but I'm having a hard time recalling when China's ever sold a large amount of crude oil out of their inventory. They've always just run it, they will stop imports or bring them down to a minimum level or that sort of thing and work off inventory that way. But I don't think I've ever recalled a time where China was selling meaningful volumes of crude oil to the market. They've always been sort of the big importer. So that's another interesting thing is even they're soaking up these barrels like a sponge. Don't expect them back. It's a little bit like a black hole unless you're a Chinese refiner. So just to sort of recap, risk premiums are back in the market. Again, in terms of just U.S. inventories as a proxy for OECD inventories and U.S. demand as a proxy for OECD demand, I think we're still underpriced in terms of having enough risk premium in the market. Even before all the tensions really took off in this past week between NATO and Russia. So, there'd probably be more upside from that perspective. OPEC production is booming as we went through. Their exports increasing even faster than their production levels. But again, it's going to a place where we're not able to see it from an OECD perspective. So it's still in some respects bullish because we're not really impacting those OECD inventory numbers. And then, of course, if you combine everything together that we've got information on a sort of a timely basis, meaning OPEC, the DOC, and the U.S., we're back to the late 2019 sort of production levels. So in the Elevate report, as I was mentioning, because I didn't want this video to go too long, we talk a lot about heat cracks. Heat cracks are on fire. There's a lot more upside when you look at it in terms of 2022 and 2023, especially if something were to kick off between NATO and Russia. And then on the downside, we've been talking about last couple of weeks about the NGL markets and about frac spreads and that sort of thing. Well, the olefin markets are the sort of precursor to the plastics. Looks like it's maybe topping out a little bit. So go through some discussions on that. Talk a lot about what Lyondell seems to be saying about the market and their views on the market and that sort of thing. So please take up our offer. Please go to theoilbalance.com and sign up for that Elevate report. It's at a really cheap price. It's going to go up here pretty soon. So, I think it would really benefit you if you would do that. So if you like this video, please like and subscribe, and we'll see you next week.